Hi guys, welcome back. So the Nasdaq opened up high today. At some point it was up 1.5% in the morning, and soon it had quickly went down. I think it had some expectation on the auction of the bond yield, and the market was pricing in the decrease already. So that's why even though we knew it slightly dropped to 1.5%, the market still went down. All the tech stocks still went down. Now if we open the 1 minute chart, it looks like it's making a round top or a small head and shoulder pattern, and that would be a bearish pattern. So now we would have to see if this support is strong enough, which is at 12,900. If it doesn't hold here tomorrow, it can come back down to backtest the lowest point on Monday or even Friday. So that's why in my video yesterday, I said watch out for the bull traps because it can come back to backtest anytime. But instead, I have reminded on the Discord to take every rebound as a chance to trim the position and keep some cash. Another way is to hedge our position with a little short position, like for example the SQQQ, which is the hedge for the Nasdaq. But it's really not a must. It's only a small security, just in case the Nasdaq continue dropping, to reduce your loss. But it's risky to buy shorts, so you always should set a stop loss according to the support of the Nasdaq. But backtesting is very normal after the huge rebound of yesterday. And this morning, it just got rejected by the 60-day moving average. So right now, as long as it stays above the 5-day moving average, which is around 12,900 as the support, then it should be still looking somewhat safe. And I think right now, after this fall in the past couple of weeks, a lot of people would set a stop loss on their position already. So whenever there is some falling, it would trigger a lot of the stop loss, which might have been what happened this morning too. So it's normal. Right now, I think a lot of people who panic sold last week are still somewhat fearful to get back in. So that's why I think the possibilities for institutions to create lower low and create a bigger bargain for people who panic sold to buy back at a cheaper price would be a lower possibility. So I think it's more likely to just move up and down to drain people's patience while the other sectors just keep on growing. And then the moment people start to cut their position from the tech stocks, the growth stocks, and change it to the traditional value stocks and recovery stocks, that might be the time for Nasdaq to be up again. Because we saw that today was another extreme. While Nasdaq was down a little bit and the Dow Jones could still create a new all-time high, increasing 1.46%. Even though the candlestick created yesterday was not so great. So we saw today a lot of the recovery stocks were up, like airlines. For example, Boeing was up 6%, making the newest high since the COVID happened last year. So it really looks like the money has moved back to Dow Jones, to the traditional industries, until a lot of people cut their position on the growth stocks. Then the capital might move back to Nasdaq, back to normal again. The S&P 500 has grown 0.6% today because it has a mix of a lot of stocks from Dow Jones and Nasdaq, so it has always been the average of both. Today it opened up high and passed right above the 20-day moving average, which was previously the resistance level, and it was rejected there yesterday. So today it has passed through this, and it would likely act as a support. Today's high has passed the previous high of the rebound, and it has broken out of this downward trend line. But still, these 2 days had created this two hammer lines. It means the selling pressure up here is too high, because before the correction, before it broke the support, there were just too many people trapped at the top. So on the way of going up, it would receive a lot of selling pressure to keep pushing the price lower. So we can expect it to backtest the support and consolidate. Because so far, on the way of going up, the volume is going less. So right now we still need to treat it as a rebound and not a V-shaped recovery. Now let's look at our stocks. Baby Neo opened up high and reached as high as 45 today in the morning. But because the Nasdaq was driving everything down, so it went down with the whole market. And also because it needs to wash away the people who bought the dip, make them take profit, or people who bought here to cut loss. The people who bought at the top, they're not going to touch it because it's too much at loss, so they usually just don't look at it. But for the newcomers who bought recently, they would need to take profit first for it to go back up. Otherwise, it would be too much selling pressure here because people need to take profit. It was trying to break through the 10-day and 120-day moving average, both at once, but failed. And now it might backtest the 5-day moving average, which is around 39. I think it would more than likely consolidate first, form a bottom before going back up. It's a lot related to the EV sector as well. EH was growing quite strong as well. It opened up high above the 60-day moving average, which was 50. Reaching as high as 54 and got dragged down by the whole Nasdaq. And now it's supported by the 10-day moving average, which is around 42. So today, the moment it touched the 10-day moving average, it bounced back up. Otherwise, the next support is $40, so not far away anyways. It might be just gaining some momentum. It can also form a head and shoulder bottom to gain momentum and drain away people's patience first. Because they need people to take profit. People who bought the dip on last Friday, like we did, would be already up like 50 to 80% in a few days, considering the lowest of 28 and the highest of near 55 this morning. So that was a big run up. A lot of people wanted to take profit already. LKCO. Finally, LKCO was acting just according to Nasdaq, unlike the previous days, to have the similar movement as the Nasdaq. So it also opened up high, reaching the high of 1.2, and then came down with the Nasdaq and had stayed around $1 for a while until the end. So I think some retail investors might have bought here again. Maybe some of the investors who panic sold last few days might want to buy it back, but I think they would be more cautious this time and set a stop loss. So I think at the end of the trading day, the coming down had triggered a lot of the stop losses, and also the short-term trader would sell off before the end of the day as well. It went down really quickly and also bounced back up really quickly, and we saw the volume in the last 5 minutes was as big as the bar yesterday when it suddenly jumped up with the Xiaomi's hearing. And is that a coincidence that the buy-in cost happened to be on the same level, around 82 cents? So for now, it looks like the institutions have started to buy the dip and the cost for them is around 80 cents. So we'll see if this supports holds in the next following trading days, especially this Friday and next Monday would be quite important days, as it would be the deadline for a lot of brokers to require investors to sell out before. Otherwise, they would need to transfer the share or need external help to do more trading with the existing shares. So that's why we need to watch out this week and next Monday how it goes, while people still need to sell out in these few days. So we need to see if the supports hold. If it does, it means someone is buying whatever somebody else sold. And then for YSG, something worth mentioning is that our stock YSG's earning would be tomorrow during the pre-market. And it is the first time it published an earning after the IPO, because it was IPO on November last year. So it's barely a quarter. So that's why I sent a message to remind everyone on the Discord. For me personally, I added some shares as well today at around 16.5. So we'll see how it goes tomorrow. I still have my shares, I still have the options. But just to be safe, you can also set a stop loss, because the support at around 15 to 16, it's quite strong, as it was consolidating there for a while last year. It was where I bought in, because every time it touched the bottom, it would bounce back up right away. So that's why we would expect this support to hold, and we are quite near the bottom already. But to be safe, you can set a stop loss to be slightly below the support level around 15 to 15.3. So you don't lose more than 10%, even though the earning is a bomb. Because recently we see a lot of earnings for the companies happen to be driving the stocks down or a disaster. So setting a stop loss can always protect further loss in case the earning miss expectation. So we'll see how it goes tomorrow. Okay? Now, in the end, I just want to remind again that even though I think the chance to create lower lows than last Friday would be less possibility, but it doesn't mean the market can just V-shape recover like this, because there are still a lot of selling pressure from the top and for people who bought the dip to take profit. So don't be surprised for it to move up and down and create multiple bull traps. So in this kind of situations, we rather make less profit than playing with fire sometimes. Just a quick reminder for the end of today. Okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.